In this lesson of the VITA Basic Tax Law course, we will be covering dependents and who can be claimed as one. We will first cover exemptions. An exemption is a dollar amount that is deducted from total income, thereby reducing taxable income. On the 1040, before the taxable income line, there was a line for exemptions. However, in late 2017, the Tax Cuts and Jobs Act reduced the dollar amount for that line to zero for years 2018 through 2025. So we don't see this on the 2022 return. Exemptions are still important though, because even though the exemption amount is zero, the ability of a taxpayer to claim an exemption may make that taxpayer eligible for other tax benefits. The two kinds of exemptions are personal and dependency. A personal exemption is claimed by the taxpayer and, if filing jointly, the spouse. If spouses are filing separately, they might each claim their own exemption. It is also possible for the taxpayer to claim the spouse's exemption if the spouse had no gross income. It is important to note that the spouse is never a dependent of the other spouse. If the taxpayer or spouse can be claimed as someone else's dependent, they would not be able to claim the personal exemption. This is important because dependents have different filing requirements than non-dependents. Additionally, a dependent cannot have their own dependent. The dependency exemption can be claimed for two types of individuals: a qualifying child or a qualifying relative. There are tax benefits for taxpayers who claim dependents on their returns. A dependent can help the taxpayer qualify for the head of household and the qualifying widow filing statuses. Additionally, credits can be given to taxpayers who claim dependents. These include the Earned Income Credit, the Child Tax Credit, credit for other dependents, and credit for child and dependent care expenses. Additionally, an exclusion from income for dependent care benefits are given to taxpayers who claim dependents. This is where we get our information from our taxpayer to determine if they can take either personal or dependency exemptions. Right above Part 2 on the intake/interview and quality review sheet is question 10, which asks if anyone can claim the taxpayer or their spouse as a dependent. If the taxpayer marks unsure, we as volunteers can assist them to figure out if anyone might be able to claim them as a dependent. Question 2 of Part 2 asks the taxpayer to list everyone who lived with them in the last year and anyone who they supported but did not live with them in the last year. The light part of the grid is for the taxpayer to give information about these individuals. The gray part of the grid is for the volunteer to fill out. These questions will help us determine if the individuals are a qualifying child or relative, or if they do not qualify as a dependent. This is the process we follow to determine if the taxpayer can claim a person as their dependent, and if so, what type of qualifying dependent they are. First, there are 3 pre-qualifying tests. If these tests are passed, you move on to the qualifying child tests. A qualifying child is the most beneficial dependency status for the taxpayer, so we start here. If the qualifying child tests are passed, you go on to a tiebreaker. This is to see if our taxpayer can claim the qualifying child or if another person is given priority in claiming that child. If the dependent is not a qualifying child, you move on to the qualifying relative tests. There are 3 pre-qualifying tests. The first one is the dependent taxpayer. A taxpayer who is dependent cannot claim other dependents. Next is joint return. A person who files a joint return for any other reason than to claim a refund of withheld income tax cannot be claimed as someone's dependent. Third, citizen or resident. A person must be a U.S. citizen, U.S. resident, U.S. national, or a resident of Canada or Mexico to be claimed as someone's dependent. There are 4 tests for qualifying child. First is relationship. The qualifying child must be a son, daughter, stepchild, foster child, brother, sister, half-sibling, step-sibling, or any descendants of these to the taxpayer. Next is age. The dependent must be younger than the taxpayer. They also must be under the age of 19 or under the age of 24 and a full-time student. For residency, the dependent must have lived with the taxpayer for over half the year. Temporary absences do not disqualify the dependent. For example, college. Next is the support test. The child must have not provided more than half of their own support. If we go through the qualifying child tests and find that the child does qualify for the taxpayer, we need to see if our taxpayer has priority to claim this child. Here are the tiebreaker rules. 1. The parent or parents are filing jointly. Then the taxpayer can claim the child. If they are not filing jointly, then the parent who the child has lived with the longest. If the child has lived with them equally, it is the parent with the highest AGI. If no parent can claim, it is the person with the highest AGI. If the parents choose to not claim the child, it is the person with the highest AGI if that AGI is higher than the parents. One does not qualify as a qualifying child, they may be a qualifying relative of the taxpayer. There are 3 tests to see if a person is a qualifying relative. First is the relationship test. This includes descendants, siblings, and their descendants, parents, ancestors, and their siblings, half-step, and in-law relations, but no cousins. Or if this person has lived with the taxpayer for the entire year. Next is the support test. The taxpayer must have provided over half the support for this person. Or this person may also qualify if there is a multiple support agreement. Finally, the gross income test. This person must have made less than $4,400 for their gross income in the year. Here is how a multiple support agreement works for a qualifying relative. Often, this agreement is used when multiple siblings are supporting their parent together. 2 or more people could claim this qualifying relative if they pass all the tests except for the support test. And together, these 2 people have provided over half of the support of the dependent. The taxpayer needs to have contributed at least 10%. Finally, there needs to be a signed statement from others on this agreement which states that they are not going to claim this person in this year, so that the taxpayer can claim the dependent. There are special rules for divorced or separated parents who live apart. Here is our checklist. Divorced or legally separated parents must have provided over half of the support together. The child must have been in custody of one of the parents for over half of the year. This is the custodial parent. The custodial parent needs to sign Form 8332. Everything needs to be in accordance with the divorce decree. Then, the custodial parent can release the claim, and the non-custodial parent can claim the child as their dependent for that year. A custodial parent can still file as head of household in the year that a non-custodial parent is claiming the child. At the top of the 1040, in the filing status section, there is a spot for the name of the child that is a qualifying person, but you're not claiming as your dependent for that year. That's so that the IRS knows that you still qualify for head of household. In Publication 4012, Tab C, there are a lot of really good tables and resources to use if you have any questions about dependents and who qualifies. Here are the resources we used for this lesson. Form 13614C is the intake interview and quality review sheet. Publication 4012, Tab C is a great resource. Also, the IRS Interactive Tax Assistant has a test called Who May I Claim as a Dependent, which can be really helpful if you are unsure.